Hello everyone and welcome to another weekly summary. Last week we talked about how diversification works on Bondora, our Invest in Summer campaign, online marketplace lending in Europe, and lastly the industry news roundup. This week we brought readers some data-driven insights regarding buyer behavior. While reviewing research on the topic, we learned that default probabilities rise as the interest rate of loan increases. Also, the literature reveals that loan purpose can indicate heightened default risk in cases where the borrower is funding a small business. Meanwhile, life events such as wedding are far more likely to avoid defaults. In our weekly industry news roundup, Politico reported on the Marketplace Lending Association's first ever meeting with lawmakers. The Economic Times published a piece looking at how the rise of peer-to-peer lending doesn't necessarily portend doom for banks. The Los Angeles Times warned that online lenders are a growing economic and political force. Peer-to-peer finance news offered a quick guide from small and medium-sized enterprises seeking capital through peer-to-peer lending options. And lastly, Forbes released an article looking at the personal finance habits of millennials. The study reveals that the millennials are the biggest generation in history. And lastly this week, we covered the monthly recovery figures across all markets. While there were some modest declines, Slovakia was the only country to drop more than 3 percentage points, while the country's average recovery for 2016 is still strong at 75%. The overall trend remains positive as seen by 11 quarters of improved performance relative to the preceding quarter across all countries in 2016. And that was it on this week's summary. And until next week, keep investing and bye for now.